November 2022 will go down in history as a pivotal period in global finance. Dramatic central banking policy moves, runaway inflation and a heated US electoral cycle have all driven massive market participation. The coming week will address the latter of the two underpinnings, politics and inflation. Hello, I'm Nick Quinn and this is your weekly markets preview for Monday, November the 7th, 2022. Last week saw an epic FOMC meeting from the Fed as they delivered their fourth 75 basis point hike in a row. Global uncertainty and volatility have, to say the least, become the new normal. For active traders, this dynamic is ideal as it produces consistent opportunities. So what's next for the US and global financial markets? Let's dig into a few of the key events that drive price action over the next 5 days with our new analyst, Connor Woods.
So Monday really is that calm before the storm. Without any real primary market movers scheduled, the fundamental traders may be focused on the weekly sale of short-term US Treasuries. A trend we've had in this US 2-year yield has been bullish for some time, but they may be in question after the latest Friday uptick in the US unemployment rate. You can bet that bond traders will be eagerly scanning these markets ahead of Tuesday's US election. We're looking at levels on the chart, and as you can see, we have this daily gap area from that FOMC. We are reacting from that area, but if we can get a break below this level and RSI also in overbought territory, we could see US 2-year yields move down towards this 4.4 and also this 4.2% level. Tuesday, the election day trade. It's time really for the 2022 US midterm elections to take place and for American voters really to cast their ballots. To be honest, it's a bit of a toss-up in the key races that we have in the Senate and the House of Representatives, as it is the party control of the US Congress. I wouldn't expect this picture to become clearer anytime soon. The final vote tally may take some time to complete. Election day also can be extremely volatile. Let's take a look at the Dow Jones right now and see if we can find any market opportunities. Now we can see straight away, this is the daily chart, that we're starting to react from this supply zone that we have here. If this level can hold, and also it's important to note if this FOMC spike can hold, and this is the spike from the FOMC, this is where there are going to be a lot of stop losses sitting above there. If we can get a move above this 33,000 level where this FOMC spike and liquidity is, we may see the market run down and we could see a test of that 31,000 level in the short term. So the midweek trade on Wednesday could be extra volatile as traders really price in this US midterm results. On the economic calendar, we could switch our focus to commodities as the monthly World Agricultural Supply Demand Estimates report is released by the US Department of Agriculture. Now, a key market mover from October's report was in soybeans because production fell by a staggering 65 million units, and this kick-started really a beginning of a 3-week rally in the soybeans futures chart, as you can see right now with the trend. Can November's report fuel a bullish autumn for soybeans? We can see on the daily chart, which I'm going on to now, we're starting to get that trade above this 200-day moving average, which could confirm that long-term bullish outlook for soybeans. The next levels in mind will be this 1500 level and also potentially up at around this June 22 high around 1587. Now Thursday will be a huge day on the markets because we have October's US CPI numbers that are set to be released. This is the primary tool for inflation in an economy. We have CPI previously at 0.4%, expected to be 0.5% change month on month. And also we have core CPI at 0.6% previously, and this time around expected at 0.5%. And as you can see, this is basically saying that the financial world anticipates that US inflation is now starting to peak. And this could play into the fact on the dollar chart right now, we can see this dollar weakness. Now this supply zone that we have was marked in our trading room, and as you can see, we've reacted really nicely from this supply zone. We've grabbed liquidity as well, which gives us that extra confluence. We've now started to trade significantly lower, and now the first targets in mind we have at this 110 level. That's the FOMC spike in liquidity. The longer term targets though remain this imbalance level, and then eventually this demand zone at 108.5. On Friday we have key data coming out from the UK in the form of GDP and also manufacturing production. It will be the GDP figures that are likely to cause the real volatility, as this is the primary tool for economic growth in an economy. Now, the UK economy is expected to shrink by 0.2% quarter on quarter, and this adds into the fact that Andrew Bailey on Thursday was talking about the longevity and the deep recession that is coming. Looking at the GBP Japanese yen chart, you can see this weakness coming through. Now we have 4 days consecutively of downside price action. Where's the next support level coming in? I'm seeing a support level all the way down at this 161.2 level. This is really a key demand zone where prices and bulls could step back in. From there could be some really nice short opportunities from this level at 166 where we are at the moment down towards this demand zone. It would also be a retest of this 200-day moving average, so really important levels to watch out for.
As a whole, the coming week on the economic calendar is tame compared to last week. However, don't underestimate the potential impact the US midterm elections and CPI can have on the markets. Everything from corn futures to the NASDAQ will feel the pressure. Risk management will be key as we engage with the action. Can you believe that we're already in the second trading week of November? It won't be long before the markets turn the page and dive into 2023's trade. Of course, it's important that we live in the here and now. There's still a lot of trading left in 2022. The team at ForexSignals and How to Trade can't wait to dive into the home stretch of 2022. So let's finish strong and trade the last 7 weeks of the year in style. From Shane, Connor and myself, trade the action well, and we'll see you in the next live stream.